Welcome to Get Real with Eddie, the show that dives into local, regional, and national real estate, the largest creator of millionaires, and the key to building generational wealth. Hosted by Eddie Rudiger, designated managing broker of Exit Real Estate Specialists. Eddie is here to share expert insights and strategies to help you unlock the power of real estate. Now, let's grow in real estate with Eddie Rudiger.
Good morning, Nancy.
Good morning, Eddie.
Good morning, Nancy. I didn't have the mics on there for a second. Whoops.
I wasted my good morning.
You wasted your good morning. That's all right. How are you?
I'm well. How are you?
I'm good. I gotta adjust this.
It is definitely Wednesday morning.
Wrong way. There we go. All right. Little camera adjustment here in studio. My headphones aren't plugged in. Yeah, definitely a Monday morning. At least it feels like a Monday morning.
It's the Mondayest Wednesday ever.
And I didn't even have you up on the board. I am completely out of it this morning. All right, see what happens when I don't have my headphones on?
See what happens when you don't drink coffee?
Oh, it would have been worse if I drank coffee, let's be honest.
No, you'd be awake.
Whatever. All right. It feels like we haven't been in studio. I know it's been a week, but it feels like 3 weeks for some reason.
There's just so much that's been happening.
Well, we had installation. Nancy is now officially the president-elect of Three Rivers Association.
Yes, I am.
Jen Viano has moved into the presidency. Congratulations to Jen.
Yes, congratulations.
And everything that she has planned and going for this year. It's going to be a great big year.
Going to be a great year.
The association moved locations. So Three Rivers is now moved.
Yes.
I mean, so that's happened within, I think that was 2 weeks ago. We really didn't talk about that on the air. But there's just so much been going on.
Yeah, just in life, in personal life, in
deals.
real estate.
Yes.
Yes. It's just a lot going on.
Yes, I had a really big closing last Friday, so that's done. That was huge.
I have a closing today, which is really excited for my first-time buyer.
Yay,
very happy for him.
Good. That's always good.
Yeah.
Love
those first
and the
timers.
biggest, let's be honest, the biggest thing that's happened since last Wednesday is they cut the rate.
Yes.
They cut the rate as we predicted. It was a quarter of a point. And they're talking about 2 more rate cuts this year. There's a lot of talk of 2 more rate cuts.
We'll see.
You don't think we're going to get 2 more?
I think it's pretty aggressive, 2 more. I mean, there's talk. I think we'll get 1 more.
I think we're going to get 1 more for sure. I'm with you on the 1.
I'm on the fence with the second one.
You're on the fence with the second one, too. All right. So we're on the same page.
Oh, okay.
We're on the same page because I don't know where this 2 more rate cuts came out of.
Yeah.
What they were talking about, where this was going to be going. It caught me off guard. What also caught me off guard was 2 actual things. So the first thing is, in your opinion, do you think the rate cut made a difference or was it already baked into the cake?
I think it was baked in.
You think it was baked in?
Yes.
I think actually it made a difference.
Really? Because it's been dipping, like right around 6. It dipped below 6 a couple of times, especially FHA. I've seen it a couple of times dip just below 6. So I feel like it's been hovering a quarter point lower for about a month. It'll bounces.
And I wasn't, that's where we differ. I wasn't seeing 6% rates. I was looking, I was seeing a lot of 6.5s and 6.3s. And now it is around 6, and it's pretty much a solid 6 now.
Mm-hmm.
So I didn't look at what the rates were this week because it's just been, Monday and Tuesday were a blur, just trying to get things going after the weekend. But yeah, we're pretty much. I've seen a lot of 6s now, and I wasn't seeing that before. So that's why
I'm seeing bouncing, and I think we've spoken about bouncing before.
Yes.
Where I felt like once that quarter point came down, we'd stop bouncing so much.
Yeah. I mean, so it's kind of a solid 6. So I guess that we're both seeing the same rates, but I felt like it did make a difference to solid that up where you were seeing some 6s here and there, and it now is pretty solid. So that's, I guess I can see why you would think it's baked in versus I think it made a slight difference. You know, because I wasn't seeing 6s. All right. Now, the interesting story.
Yes.
This was on September 18th. Why did mortgage rates just go up? Question mark. So, after hitting 6.13 on Tuesday, Mortgage News Daily Survey showed a 30-year fixed rate moved up to 6.37 on Thursday.
Again, it's this bounce thing.
I think this was just a reaction, all right, to the market and to what was going on. This is from Real Estate News. We've been pulling a lot of articles from them lately. This is David Gallagher. I've been reading some of his stuff, and he's got a really good vibe. You know, rates are still hovering around the lowest levels in over a year, you know, leading a surge in refinances. But it's unclear if the rates are low enough to attract buyers given an ongoing affordability challenge. But some indicators point to home price declines in the coming months. So they think there's going to be some declines coming in pricing. I don't know. I mean, yeah, we've talked about that in certain areas. Yes. In the Chicago market, I don't think so.
I've definitely seen a more normalization, a slowdown, but it's becoming more of a normal market. I can see it, but a price reduction.
Nationally, yes. You've got some markets.
Yes.
You've got some markets that have slowed, that are into the inventory is where it is a buyer's market.
Yes.
They're getting into buyer's market inventory, 6-7 months, you know, even 8 months worth of inventory.
But if you look at those where those markets are, they were the ones that bubbled up so fast during COVID.
Yes. They were like what I call the COVID markets. They were the markets where people were leaving one state to go to the other state because they liked the rules and regulations under COVID in those states better.
Well, they also liked that it was cheaper.
The rules and regulations, the price, and let's be honest, what was the last indicator? The weather.
Mm-hmm.
You saw a lot of people leaving New York, all right, to go to Florida, all right, in the middle of December. Absolutely. I mean...
Well, that's pretty traditional. I mean, snowbirders, and then you retire, you move to Florida. There's more New Yorkers in Florida than there are Floridians, or that used to be when I lived there. That was the ish.
I completely agree with that statement. The difference is that ish was amplified. There was more of it. So it's not that it was abnormal. The abnormal part was the percentage of the number of additional people. So.
Well, and smaller cities that, again, weren't as expensive and stuff, they went to places like Austin, and they went to places like Arizona, where it was a little less expensive. The weather's nice, like you said, and they could get some space, because that's what everybody wanted, was to get some space during COVID.
So they're talking about how that these current rates, while they're a step in the right direction, it's not enough to unlock the housing logjam that has been going on. And that's a great description. I do feel like the housing market, even in Chicago, is in a logjam.
Well, I called it something else a couple of years ago. Call it a plug toilet, but...
Clogged toilet. All right. Well, that makes sense, too. I like the logjam better. So,
just saying on that one. I would totally agree with that. That we're trying to take steps to help mitigate some of that jam. But I think it really comes down to pricing.
I think it comes down to development. It comes down to development. Pricing is not going to go down when supply and demand is in the positions that it is.
Right.
You have a demand that's outpacing supply still.
Okay, I could see, because it's all about, bottom line, it's all about affordability.
Yes.
And that's what I meant by
Yes.
pricing. It's really affordability by building more homes, to your point,
Yes.
by being able to loosen some of that up
Yes.
and get affordable housing,
Yes.
building affordable housing. We don't need 4,000 square foot homes,
No. No. We need
1,800 square foot homes.
1,800 square foot homes, and you know what? You can have vinyl floors. You can have Formica countertops. You can have vinyl siding. You don't need all brick, all granite countertops. You don't need to have all hardwood floors. You can have carpet. Those are upgrades the buyer can do later down the road.
Yes.
Get them in the door to home ownership first. Worry about the pretty stuff later.
Build them a good, strong home
Yes.
that they can improve upon and do those upgrades eventually as their pocket, allows. And that's how we always did it. That's how we did it back in the day, with sweat equity.
Exactly. So going local and looking at someone that has what they think is a plan for real estate, Markham, Illinois has put a moratorium on rental property. So they put it on at the beginning of the year, and they just extended this moratorium.
Okay, I was going to say, I don't know. The vote happened on Wednesday night, and because, we were at installation, I didn't hear what the outcome was.
No, they voted to continue the moratorium. I don't know for how long. So here, what they're doing is they're saying you cannot rent out your house. If you have a renter in there, okay, that's fine. It's not going to affect the current renter. But if that renter moves out, then you can't rent it out again. Can't rent it out. Nope, you can't. You can't rent it. Sorry. Now, keep in mind, their own numbers says the Markham community is 19% renters.
Yeah.
The national average for home ownership is 64%. That about 63, 64.
So it's trending about right.
They're only 19% renters. They're 81% owner occupied. And they want that number down to 10%.
Which I don't understand. What they're trying to do.
That number just does not exist.
Well, you're cutting off a viable, again, they're trying to cut out a viable part of the market that we need. We need to be able to have rentals. There are people that are just not well equipped to own.
I want to
Whether
ask,
it's just freshly moved out of mom and dad's basement, or they're elder, or they're whatever they are.
I want to ask the elected officials, what are you doing for the single mom that bought a house, now has the opportunity, or they have to move for a job, whatever the reason they have to move, But if they now have to sell the house, it has to go for a loss. They're putting a financial burden on a property owner.
Yeah.
Some people get pushed into being a landlord, not because of choice, but because of circumstance.
Yes. It's an unreasonable burden to put on the town.
And then they're sitting there and they think by selling, oh, well, now all these rentals are going to sell and that's going to help our property value. No, it's not. You're forcing fire sales.
Yeah.
You're forcing these sales to go on. The inventory is going to increase so much and there's going to be so many options. Prices are going to start dropping because you're creating an artificial market.
Yes.
Mayor Roger Agpaw? I'm mispronouncing that and I apologize. How would you say it?
Agpawa.
How say it again?
Agpawa.
Agpawa. There we go. We believe that property would not be as transient and would not have the turnover, it would be consistent and stable. It is consistent and stable. They have the same owner.
Well, yeah, if it's and renters need to rent. There needs to be options for people.
We've got a lot of long-term renters here. Well, stay here, and this will never affect you. It will affect them.
Yeah.
Because you've just limited the supply of rental property. So guess what's going to happen at the next renewal? They're going to get their rent raised because of supply and demand.
Yeah.
Because now, as the landlord, I've got to go offset the money I just lost on the other unit because of you in Markham.
Well, no, not only that, but these landlords need to prepare that when this renter leaves, they're going to have to sell. So what do you think that's going to do? They're going to have to get their reserves up. They're going to have to, hopefully their renters are good renters. What if they're not good renters?
So one of the speakers stepped up and they brought up a good point, and this is the quote. We want to have investors to rehab those properties and get them back on the tax rolls. It's hard to sell properties when they're boarded up houses and down the block. So yeah, you're going to end up having problems. Nora Gruenberg, our governor affairs director, was at the meeting, and she said, but it's also preventing people from accessing the housing, and it's very concerning. Many people can't get a mortgage, but they're still able to pay rent. So this is preventing people from accessing housing they can afford in communities they want to live in.
Yeah. Markham is shooting themselves in the foot.
I'm so frustrated right now with this topic because I'm sorry, someone worked really hard to buy that property, to make that property available from the fruits of their own labor, and you're saying they can't use it to rent out, to provide housing for another human being. It's just, to me, it is mind-boggling. I honestly think there's going to be some legal actions taken.
Yeah.
I really do.
And to the point that, if there's a disparate home, who do you need in there? Who are you going to call? A rehabber to come in and take care of it. But now you can't.
I could understand. I mean, they could have simply said, we're not going to allow any new rental permits. So don't come here and buy thinking you're going to get to rent. No, they went the next step. If your tenant moves out, you have to sell the property.
Yeah.
You don't have a right to do that. I just don't understand where they think they have a right to do that. It's going to be interesting to see what happens.
Yeah.
So, speaking of legal actions, did you see that Zillow is being targeted for a class action lawsuit?
I heard rumblings. I did not read this, though.
All right. There is multiple aspects to this. I pulled this off of Real Estate News. Andrea Bramblin. Yes, I cannot pronounce names, people. I just Brambilla. So I was close. Was talking about this. So the whole idea is they're getting sued because of Zillow's Flex program. And the Flex program is that you owe, as a real estate agent, when you get a call from a Zillow agent, they may or may not be on the Flex program. It doesn't matter. It depends. That there's two different things. You can be paying for leads per month, or you can be paying on a percentage. But the argument is for those that are on a percentage, because they have to pay a percentage of what the closing is to Zillow, that's driving up the commissions and making the agents charge higher commissions to those consumers. And so that they're saying that this is a problem. So Steve Berman and Hags Berman's founder and managing partner said this in a statement. We believe Zillow is well aware of the potential for ill-gotten gains in this space and has sought to play fast and loose when it comes to people's basic needs of housing is on the table. So it's going to be interesting to see how this plays out.
Yeah, there's a lot of movement in the industry.
Yeah.
Did you see Compass
Compass
is buying away?
Oh, anywhere.
I mean, anywhere?
Yes. So if those who don't know, Anywhere owns Coldwell Banker, Century 21.
Berkshire.
No, they're not Berkshire.
I thought they were. Oh, no, they don't.
No,
Berkshire's. Okay. Berkshire is, what's his name?
Yes. Warren Buffett.
Thank you.
Yes.
Words today.
So ERA is part of it. There's a couple other ones that aren't in our market.
Yeah.
The two biggest ones in our market is Century 21 and whatchamacallit. So yeah, Compass moved to buy it out. I think it's still got to get approved by shareholders yet, and they haven't gotten to that point. But it'll be interesting to see how that plays out.
Yeah.
But this will make them a company that has 300. I want to say it's over 350,000 or close to 350,000 agents.
Agents worldwide.
Worldwide.
So in all 120 countries and every state.
Yes.
Yes.
So that's going to be a huge aspect.
Crazy.
Yeah. I mean, but this is going to be interesting because it could affect how referrals are done, not just with Zillow, but with agents. I mean, there's a bigger, I think, question here to see where this is going.
Yeah, agent to agent referrals.
Yeah. I mean, it really could have an impact.
Yeah, I do 2 to 3 like out of state referrals a year.
Yeah, I do too. I just closed one on, and I don't see how, at least in my situation, it did not affect, the fact that it was or wasn't a referral does not affect the commission.
No.
Supply and demand affects my commission. How busy I am at the time I've got things going on. I mean, that's really what affects my commission rate.
Mm-hmm.
You know what I'm saying? So right now, my workload's been normal. So I'm at what I deem as a normal my normal commission.
Mm-hmm.
You know, so what my commission rate is.
And it's all about truly what you
what
charge, and it's based on your
value.
Expertise. Yep. And all that. It's value.
My value of what I bring in. So it just all depends on what each agent's doing and how they want to do it and what they want to do, honestly. They have a right to do and charge what they want to charge, and everybody's different, and everything is negotiable.
Yeah.
I mean, you can negotiate. You know, an agent might say, no, I'm not going to do it for that price. That's they're welcome to the negotiation.
Yeah, welcome to the table.
They know that you can't expect them to do what you want for your price. I mean, it just they know what their costs are. They know what their whatchamacallit is, and their overhead, and they've got their numbers.
Yeah.
So, all right, what town do we want to talk about? I think we do Joliet, because we should have. We got August number. We did Joliet last week.
Yeah.
I think we did Joliet last week. Want to do Plainfield?
Sure. Let's do Plainfield.
All right, we'll do Plainfield since last weekend I had my 30th class reunion.
It was homecoming
for Plainfield. Yes,
it was homecoming. I did as well. Just didn't go because I was out of town.
You were out of town.
Mm-hmm.
Yeah. So we'll talk about Plainfield numbers.
Yep.
After the break. Keep it here with Get Real with Eddie.
Are you a real estate agent ready to take your career to the next level? Tired of feeling like just another number in the office? It's time to join a brokerage that's invested in you. Exit Real Estate Specialist. At Exit, we don't just offer a desk, we offer growth, mentorship, and the tools you need to build lasting success. Led by Eddie Rudiger, designated managing broker, we focus on helping agents create generational wealth, not just close deals. Imagine having the support of cutting-edge technology, top-tier training, and a culture where your success is celebrated. Plus, with Exit's unique residual income opportunities, You're not just earning commissions, you're building your future. Ready to grow? Ready to thrive? Join Exit Real Estate Specialists today. Call Eddie Rudiger directly at 815-823-5478 or visit www.exitrealestatespecialist.com to learn more. Your future in real estate starts here.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
It's Eddie Rudiger from Exit Real Estate Specialists.
And Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Thinking about selling your home? Don't just list it, leverage it with Eddie Rudiger, designated managing broker of Exit Real Estate Specialists. Eddie puts powerful marketing strategy behind every sale, featuring professional photography, detailed floor plans, immersive 3D virtual tours, and dynamic video walkthroughs that make your home stand out. With targeting online campaigns, social media exposure, and proven strategies, Eddie attracts serious buyers to get your home sold fast and for top dollar. Plus, you'll always be in the loop with clear, constant communication. Ready to sell with confidence? Call Eddie Rudiger at 815-823-5478. That's 815-823-5478. Or visit yourdwellings.com. Eddie Rudiger, Strategic Marketing. Stand out results. 815-823-5478. Or visit yourdwellings.com today.
The face for radio, the heart for real estate. It's Get Real with Eddie.
All right. Plainfield. That's where we're at.
Plainfield. My hometown.
Median sales price in Plainfield, Illinois. Hold on, I'm going to flip over to resale because I know you like to take the construction out. For single property values, do we want to do all single property or detached only?
Let's do detached.
All right, so we're looking at single family houses, detached. The median sales price is $419,900, up 7.7%. That again is on the median. The average is $460,266. That is up 6.7%. Market time in Plainfield, if it flips over, is 36 days. Been holding at 36 days for the last couple months. Actually, probably since the beginning of this year.
Kind of flattened
since March.
out.
Yep, it's been just 36 days since March. That's up 28.6% since the beginning of, or since last year. That is on the average market time. Hold on, I gotta get that out of the way. Median market time is 15 days. That's up 25% from last year. It is slightly down month over month though. In July it was 16 days. So listing to contract Listing days to contract on average is 21. That's up 10.5%. And it's flat from last year. It is 9 days on the median listing days to contract. So, and it actually has moved down month over month. In July it was 10 and now it's 9. So we're starting to see, stuff moving again slightly. I mean, honestly, in August I was busy.
I was going to say I was really rocking it in August.
Yeah, it was jumping. So month supply has moved up from it's up 36.4% year over year to 1.5 months. It's been holding at 1.5 since July. So it was 1.4 in June. So it's been ticking up slightly and moving in that direction. The showings to contract is 11 showings to contract. That is down 15.4%, while the average showings to contract is 15 showings. That's down 6.3%. So showings per listing is down 7.5% to 8.6. So the decrease in showings is not really troubling me when you look at the increase in units. You look at the number of new listings that are coming on the market. Market's up 11.1% in August for new listings year over year. And it's been steadily going up. I don't think it's a big concern, especially when month supply is still sitting at 1.5 months.
Yeah. I mean, yeah. Getting a couple extra houses on the market is so people can breathe a minute. It's still under 2 months.
Well, and that's the biggest thing is we're still seeing multiple offers.
Yep.
It's just right now, tell me if I'm wrong, it's a trickle effect. You're getting a couple showings, you get an offer, and then you get a couple more showings and another offer, and a couple more showings and another offer, instead of everybody trying to pack into a Saturday and you got 10 offers by Saturday night.
Yeah.
You got an offer on Saturday. Oh, here's another offer on Sunday. Here's another offer on Monday. They're like trickling in.
Yes, showings are trickling in. It's like a steady trickle.
Yeah.
But it's not hair on fire. We got to get in an hour after this thing is listed. There are still those properties, but they are the ones that are what I would nearly perfect. So they're all updated and they've got all the latest and greatest. Those kind of properties are going in minutes.
And they are priced perfectly.
Yes.
There is no qualms about the price. They may even be priced slightly under market value, which we'll get to in a second. But first, I wanted to talk about the mortgage delinquencies. And what does that tell us about the future with foreclosures? Because according to Adam, during the housing crash, over 9 million people went through some sort of distressed sale. All right, 9 million people.
Yeah, that's brutal.
Last year, and that was from 2007 to 2011.
Yeah, 9 million. Keep the number in mind.
Last year, there were 300,000.
Yeah. Nationally.
So if I took, the 4 years and divided it into 9, I'm doing about 2 point something million distresses a year on average. Last year we did 300,000. Watch the clickbait. Watch these individuals out there talking about how, home distress sales are up. They are up over blank blank. Yeah, because we couldn't do a foreclosure during COVID.
Right.
They're just misleading you. They're scaring you because they're probably trying to sell you something.
Yeah.
I've seen a lot of them. You sign up for my home buying course, $19.99.
Mm-hmm.
Here's my investor course. Make sure you're getting somebody who's giving you honest data, an honest interpretation of the data. Experts in the industry look at the mortgage delinquencies, loans that are more than 30 days past due, as a sign of potential foreclosures down the line. And the latest data for delinquencies is reassuring about the market overall. Right now, delinquencies as a whole are consistent with where we ended last year, which means we are not seeking the kind of increase that would be signaling widespread trouble. Marina Walsh, Vice President of Industry Analysis at the Mortgage Bankers Association, explains, while overall mortgage delinquencies are relatively flat compared to last year, the composition has changed. I don't understand where she's going with the composition has changed.
Yeah.
Right now, FHA mortgages currently make up the biggest share of delinquencies. Okay, so FHA mortgages are about 4%.
Okay. Of the delinquencies.
Of the delinquencies. So they are high. I'm not going to argue that. Because in 2008, they were near 6%. Like January of 2008. They made up 6% of the delinquencies.
So what is the ratio of, just in general, conventional loans versus FHA loans? Like, on average, that'd be a wonderful question. Now I want to know.
I don't know.
Are you seeing where I'm getting?
Yeah. But
Are you seeing where I'm going?
Like 20% of the market's FHA, 30% of the market's VA, conventional loans
Right.
are, I don't know.
So my question then, because I want to compare, is that 2% of all FHA loans? Is that, to get a relative...
Well, this is right now about 4.5%.
Right, but I'm just saying.
4.25%, let's say. I don't think it's a half.
I'm just using random numbers right now.
Let's just say 4.25% of all FHA loans are 30 days late. Is this 30 days late or actually?
I think it was 30 days.
Percentage of mortgage delinquency by mortgage type. Yeah, these are 30 days late. So.
And then what percentage is FHA versus USDA, VA, conventional?
You got to be honest. You got to keep in mind though, the FHA can be. I'm not saying it is. It can be a higher risk loan depending on the terms.
It can be.
Because they do take a lower credit score, so the repayment history might not be as concerned. But these individuals got a shot. They got a chance to.
Well, that's part of the American dream.
Yes.
Just give them a shot.
Yes. So, okay, 4%. Here's the bigger question. Here's my question. We have 4% of delinquencies out of what? That's the other that's the variable I want to know. So it was, because if I had 6% of 100,000, all right, let's make it easier numbers. I have 6 out of 100.
Mm-hmm.
Okay. So 6 out of 100 people failing. Well, that's not great.
No.
All right. I have 4 out of 100 failing. Okay, that's not great either. It's not a big difference. But is it 4 out of 100 or is it 40 out of 1,000?
Mm-hmm.
All right. Because now we've increased our pool by 10 times the amount. Yes, our 4% failure rate is still there.
Right. Is it 4% of 100,000, 4% of every
how many
100? Yeah, that's a good question.
And that's the question I want to look at. How many loans were FHA at that time for that 6% versus how many loans are FHA at this time?
Yeah, that's a good question.
And FHA mortgages are more concentrated in the South. So you're seeing, so the national average is 12.34% of all loans are FHA. Illinois is right there on target with 12% of our loans being FHA.
Okay.
All right. Mississippi is 22%. So Oklahoma is 21%. Those are the two biggest. Texas 17, New Mexico 18, Florida 16. So
I'm surprised it's not bigger.
For Illinois?
For just average, that
average?
the average isn't more like 20 or 30%.
I'm actually not. I'm really not. So, the Federal Reserve Bank of New York explains, looking at the graphic of concentration of loans, recent data indicated that a higher portion of mortgage balances are delinquent in many of the southern states. We see that higher delinquency rates coincide with higher share of FHA loans across the states. So, it's just an interesting thing to watch. I don't think we have a panic situation or any red flags just yet. It's something to watch. I'm not saying ignore it.
Yeah, what's causing that would be my question.
I don't know. You got a whole bunch of different aspects that could be the issue.
Right, that's what I'm saying.
You know what I'm saying?
So it's just kind of, out there.
All right, so you got a new listing on WoodHill Court in Plainfield, Illinois that is up on the market. I think we've talked about it once before, and we're going to talk about it again right after the break. Keep it here with Get Real with Eddie.
Are you a real estate agent ready to take your career to the next level? Tired of feeling like just another number in the office? It's time to join a brokerage that's invested in you. Exit Real Estate Specialist. At Exit, we don't just offer a desk, we offer growth, mentorship, and the tools you need to build lasting success. Led by Eddie Rudiger, designated managing broker, we focus on helping agents create generational wealth, not just close deals. Imagine having the support of cutting-edge technology, top-tier training, and a culture where your success is celebrated. Plus, with Exit's unique residual income opportunities, you're not just earning commissions, you're building your future. Ready to grow? Ready to thrive? Join Exit Real Estate Specialist today. Call Eddie Rudiger directly at 815-823-5478 or visit www.exitrealestatespecialist.com to learn more. Your future in real estate starts here.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
It's Eddie Rudiger from Exit Real Estate Specialists.
And Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Thinking about selling your home? Don't just list it, leverage it with Eddie Rudiger, designated managing broker of Exit Real Estate Specialists. Eddie puts powerful marketing strategy behind every sale, featuring professional photography, detailed floor plans, immersive 3D virtual tours, and dynamic video walkthroughs that make your home stand out. With targeting online campaigns, social media exposure, and proven strategies, Eddie attracts serious buyers to get your home sold fast and for top dollar. Plus, you'll always be in the loop with clear, constant communication. Ready to sell with confidence? Call Eddie Rudiger at 815-823-5478. That's 815-823-5478. Or visit yourdwellings.com. Eddie Rudiger, Strategic Marketing. Stand out results. 815-823-5478. Or visit yourdwellings.com today.
Stocks may succeed, stocks may fail. Real estate is always there. It's Get Real with Eddie.
All right, Nancy, tell me about 2307 WoodHill Court in Plainfield.
Well, 2307 WoodHill Court in Plainfield is a lovely 1,082 square foot detached townhome. It's a very unique property in that subdivision.
Wait,
they're all kind of.
How is it a detached townhome? You said
That's what they call it.
A detached townhome?
That's what they call it.
Really?
Yes.
See, I would call it a single family house.
Yes.
Because there is no attached walls at all.
There are zero, and that's why I said it is detached, but it is the layout of a townhome, and that's why they call it Riverside Towns.
I would just call it a single family with zero lot lines. Because, yeah, these are zero lot line properties.
Yes.
So,
very, very cute properties, but again, that's what they call them. So it is a 2-bed, bath and a half with a full basement, 2-car garage. So a lot of nice features in it. It does need a little work, but we are featuring one of my lender's programs.
okay.
It's a 1% buy down.
Ooh, the lender's got a 1% buy down.
The lender has a 1% buy down.
Who's the lender on that?
It is Fairway Mortgage,
Okay.
Scott Kajewski.
Okay.
And they also have some really good renovation programs. So you can go in and do the fixing that needs to be fixed. It's not terrible. It's mostly cosmetic. It's not.
I've been in this, and it's just, the could use a little carpet in the basement. I mean, you could redo the flooring on the main floor if you wanted to. You don't have to.
No, it's completely move-inable.
Yes.
It just needs, if I were to go in, I do the carpet. I do a couple of little fix-me-ups.
If you were to move in, you would refloor the whole house. All
yes,
right? I know you.
Yes, I would go in and refloor.
You would refloor the whole house. That would be you.
Yes.
Me, I wouldn't. I probably wouldn't, let's be honest. I would probably just look at doing the carpet in the upstairs and in the basement.
Yeah.
So, and then a year or two down the road, then do the main floor.
Yeah. And see, before I moved in, before I have all my stuff in there, I'd just do the whole thing.
Yes.
And of course, you want to paint, and I would do different blinds, and I would, all that
yes.
goofy stuff, how I am.
Yes.
But it's all cosmetic. The house itself is in lovely shape.
Yes.
So.
No. Yeah, it is definitely a nice property, and it is not a townhome. This is definitely
it is a detached
single
home.
Family house. Yes.
Yes.
So 2 bedrooms, 1.5 bath. New price at $240. $240.
Yes.
That's not a bad deal. Actually.
No, it's a great deal.
I mean,
and it's located just very close to Route 59 and Caton Farm off the frontage, so there's tons of restaurants, easy access to 55, everything you could want, very easy to access from there. So
I'm wondering,
yes,
what is the house payment on it? What's the HOA fee over there?
HOA is $155 a month.
So $155 a month.
Mm-hmm. I might even have that because Scott did some flyers for me. Hang on, let me see if I've got
All right,
that.
so with taxes at $41.94, insurance for $1,200 a year, and the $155 a month, I'm showing a monthly payment of $21.61. That's not bad, honestly.
Yeah.
I mean, you're getting into your own house. You know, that's in some cases you're kind of cheaper in rent, and that's Plainfield schools there. So definitely an aspect. And if I'm correct, there is a fire window in the basement too, so you could put a basement bedroom.
You could put a bedroom down there.
Yeah, that'd be a legal bedroom. So that's another aspect.
Yeah, there are a lot of options in that house.
Yeah, I think that would be really, really good property. All right. With that being said, talking about properties, before we get out for the day, why 50% of homes are selling for under asking and how to avoid it. So, right now, about 50% of homes on the market are selling for less than their asking price, according to the latest data from, I still can't say that, Cotality? That's the
Cotality.
Cotality, that's it, Cotality. So the graphics use data from Zillow to show how this trend has shifted over time. Here's what it tells us. In 2018, 2019, 50 to 55% of homes were selling for under asking. That was normal. All right. 2021 or 21 to 22, only 25% were selling for under asking. That's a record low. All right. With low rates and the intense buyer demand during COVID. So, and then 2025, 50% of homes are selling below asking. That's much closer to what the typical housing market is.
And that's what I'm seeing.
Yeah.
I would say that's really what I'm seeing.
This is another clickbait, and watch what they're trying to sell you. Because they're coming out and saying, hey, look, houses aren't selling, they're selling for under asking price now. The market's diving. No, they're not. Houses usually sell historically for 94 to 96% of asking price.
That's a normalized market.
Yep. So, yeah, and we're at that 50%. We are back. I would say we're back to a normal market. I think we're really back to the normal market.
I feel like we're back in 2018, 2019.
Yes, I really do. I feel like that's where we're at. The only difference is we still have way less inventory that we're dealing with. Mm-hmm. Because we're running about 5 million units a year, and we're doing about 4 still. I think we're going to finish around 4 million this year.
Yeah, pretty close. If not at 4 million, they'll be really close to 4 million.
So how do you set yourself up for success so you can be on the other side of that 50% and get over list price, get multiple offers? 1, prepare your house. Tackle essential repairs and touch-ups.
Buyers want them move-in ready. I can't say this enough. If you're looking for top dollar, you have to present a product that is top dollar worthy.
Pricing strategy from day one. Don't rely on what nearby homes are listed for. Lean on your agent for what they've actually sold for. And the prices of your house should be based on that.
That's why we run comps.
Doesn't matter that Karen down the street has her house listed for $500,000. If all of the close comps say $400,000, you're going to sell for $400,000 most likely.
Yes.
If it's an apple to apple comparison, maybe you'll sell for $405,000. Okay. Could even sell for $420,000. I mean, there's no guarantee you're going to be selling for $400,000. You might still get more, but you're probably not going to get the $500,000. Karen's going to probably have to drop their price 2 or 3 times because I don't know why they listed at $500,000.
Or it's not equivalent. Maybe they have
That's
that
true.
many upgrades. Maybe she has more square footage. Maybe she has a big yard loaded full of a pool and all the accoutrements.
Yep.
Outdoor cooking area.
Yep. And then last, but stay flexible. Just be willing to negotiate closing costs, repairs, things along that deal. Because in today's market, those are the game changers to whether you're going to the closing table or not.
Yes.
I mean, it's that simple. So, all right, that wraps it up for Get Real with Eddie. Don't forget, check us out online, 24 hours a day, 7 days a week at GetRealWithEddie.com, talking about your largest investment, your home.
Thanks for listening to Get Real with Eddie. The views and opinions expressed are those of the host and guests and do not constitute legal, financial, or real estate advice. Listeners should consult appropriate professionals regarding their individual circumstances. Eddie Rudiger and affiliated parties are not liable for actions taken based on this content. Eddie Rudiger is the designated managing broker of Exit Real Estate Specialist, Illinois license number 481-014247, located at 2405 Essington Road, Uden I, Joliet, Illinois 60435. Exit Real Estate Specialists is an equal housing opportunity provider. Each Exit office is independently owned and operated. To join an Exit office, call Eddie at 815-823-5478.